US-based digital lender Branch International will pay about 230 million shillings for a majority stake in a local microfinance bank in Kenya. The San Francisco, California headquartered fintech with offices in Lagos, Mumbai, and Nairobi has received a regulatory nod to acquire an 84.8% stake in Century Microfinance Bank. Joining us to discuss further is Fisayo Durojaye, who is an investment analyst with EchoVC Partners. Fisayo, very welcome. Thanks for joining us.
Thanks for having me.
Kick it with Branch. Branch, I want to start with that. They're a digital platform for lending. Why the interest in taking a majority stake in a physical brick-and-mortar microfinance bank?
I mean, it's simple. It's regulatory cover, right? Over the years, we've seen the Kenyan, the KCB, Kenyan Central Bank, go hard on digital lenders because I mean it's seen as predatory lending, where people pay as high as 10% per month interest rates, and of course people that are low income earners, need access to this quick cash, right? So they download an app, borrow some money, then go to another app, borrow another money. I mean, I think as a last count before the KCB crackdown, there was a minimum of about 30 to 40 digital lenders in Kenya alone. So you see people going from bank to bank or from digital bank to digital bank to borrow, to pay back the other ones. And of course, when they now introduce the what's it called, the credit bureau, a lot of these bottom pyramid people, can now not access, financing again because they are now bad credit because of the activities of the digital lenders. I mean, at least that's the view of the KCB when they started. So, of course, people like Branch, which was big digital lending platform, were affected. Branch, Tala, quite a number of them were affected by this crackdown. So, I think they're all figuring a way to operate in the market by having some regulatory cover. So, as a microfinance bank, you are allowed to lend, right? So that's what I believe that Branch is doing.
Does that negate the forward movement of tech platforms if they have to now divest and now take a majority interest in physical structures? How do you see that playing out?
I mean, so there is no license for digital lender, right? So you have to operate a digital platform. So think about it this way. There's a bank, right? For you to operate a bank in Nigeria, you need to have CBN license to operate, either a commercial bank, a regional bank, a microfinance bank, a finance house. You can now use tech as a medium of delivering your service. So yes. I think that's what Branch is trying to do. They have, the regulatory cover as a regulated microfinance bank, but they'll still use their technology that they've built already as a medium to deliver the service. And I think that's just what it is. I don't say it's changing strategy. I think it's just to ensure that, yes, their activities as a lender is covered up around, the regulatory framework that is available in
how do you see as far as the digital platforms are concerned and lending, how do you see that going forward? Is there still growth, or are these checks by the regulators going to, I guess, impede that growth or slow it down some?
So, I mean, the story has been that every startup, right, will be a fintech eventually. Then the question is that every fintech will be what? My postulation is that every fintech will probably evolve to be a bank. Somehow, in some way, right? I've seen that. So start from digital lenders. They start from lending. Now they started, okay, can I get some savings on my platform and attract the savings by higher interest rates? So if I give higher interest rates, I'm able to lend to people, right? Then can I add some bills payment to it? Or can I add some money transfer from wallet to it? So again, that is making you evolve to becoming a bank. So for digital lender, I think the general evolution for them will be to figure out a way to move to becoming a bank eventually. And I think that's the direction for most of them.
Great stuff. All right, that's lending. I want to ask you about EdTech. You're in this field here in Nigeria. This iExperience in South Africa, $2.5 million funding to expand their operations. How is the progression of EdTech? How would you rank it or rate it? Like, whether it's across Africa, or maybe Africa. We can look at Africa.
I mean, EdTech is difficult almost everywhere, but it's particularly difficult in Africa because of broadband infrastructure, right? For you to deliver good quality education. I mean, I saw a picture that, okay, the way education has been, since the 1980s or since the 1970s. It's still the same way. People sit down with table and desks in classrooms to learn. But of course, the work environment has shifted. I remember my parents, learned how to use typewriter. I've not seen typewriter in years again.
Right.
Maybe I've not entered the ministry. Right. Right.
Yeah.
But now, the work environment is now more digitally aware. And then with COVID last year, I've not stepped to my office in a long time.
Right.
Right. Since last year, I've not gone back. So I have to work digitally. I have to connect with my colleagues from everywhere around the world, and work together and figure out a way to collaborate. So EdTech evolution is a path to figure out a way to ensure that education catches up with the way work is being done today. The argument is that current university system or education system does not prepare their graduates for not even the future of work, the present of work, right? So I think that's what I experience is trying to do to help prepare people for they said for the future of work. But I don't even think the universities are preparing people for the present of work.
What about the income gap? That those who have the money to access these facilities. So would EdTech further create a gulf between the haves and have-nots in terms of access to education?
Yeah. So I think the biggest thing is infrastructure, data, access to broadband internet, right? So if broadband internet penetration in Lagos is as high as 80%, and in my village is as low as 20%, of course, it means that the haves and the have-not, the gap will continue to widen. But of course, the argument had been that internet is the leveler, so it means that if you can access internet, you can start reading from Wikipedia, even if you can't watch videos, right? You can start reading, it will probably be able to, with the 2G internet, probably to load a page.
Yeah.
Maybe the pictures won't load, but at least you can start, from somewhere. But of course, the real experience in learning is probably immersive. We've seen, things around VR and virtual reality where people put the experience into the eyes of the child, right? Rather than try to show the child in the pictures. Okay, you just wear your VR mask and then be able to physically be experiencing, Disneyland here in Nigeria. And I think those are the things that of course, people will start figuring out a way to do. But to your question, would the evolution of EdTech, if it is still broadband heavy, if it's still video delivered, I think that the gulf will continue to happen.
Fantastic. What about curriculum revamping? Is that something that we have to leave to the government or private institutions? You were just talking about earlier now how present curriculums don't prepare students for today or let alone tomorrow. So what is it going to take?
Yeah, so I think it will take a lot more action from the government because it's difficult. So if the government is not, so for instance, there's standardized exams at SS3 that most children will write. If you think that the way mathematics has been taught or the way English has been taught is not great, I want to create a curriculum. Unfortunately for you, the only access to university is through the government's own designed program.
Right.
So it means that the government has to take a lead. If anything is going to change with the way testing is being done, with the curriculum is being designed, in the way subjects that should be taught are not taught. Now, it's government that takes the lead on those fronts, right? So we can have private sector engagement, right, or push or drive, to ensure that yes, someone from private sector leads in the Ministry of Education, and then be able to push such policies across the finish line. But I think it's still likely a government-driven,
Initiative.
Initiative.
Is broadband expansion, should that be the number one? As we talk about EdTech, if you could pick one main priority, should it be broadband expansion? Is that an infrastructure thing? Or is it, okay, let's do the curriculums? There's so many fires on. I don't know which one to put out first.
I think if I solve broadband, I can be here and learn from MIT.
Right.
Right. I can be here and learn from Harvard. People do that today.
Right.
So it's not that's at the senior level, right? At our level, where university education, but not at the primary level or secondary type level. I'm not sure how much of learning or democratization of learning has happened in that space yet. But of course, from a professional level, you can be here and take some external exam, from anywhere in the world. So yes, broadband internet is an infrastructure problem that people can then build self-help on, right? But when it comes to primary, secondary education, I think it's still largely difficult. So so internet would not necessarily be the solution to that. It's
Right.
probably going to be from the curriculum angle first.
Great stuff. Weren't you here last time we talked about Uber and the workers and the strike? Exactly.
Action.
You were here last time. All right, great. So good that you're here now because, I guess this is an obvious question, but what do you make of the move where they've now increased fares, Nigeria, Kenya, and these other African markets?
Yes. So basically, I think the question we had the last time was that Uber drivers were going on strike because they felt that the cost of delivering the service to them is higher. And then, of course, Uber is trying to win customers. So win customers by not increasing their prices. So they wanted Uber to increase their fares. That's number one. And also probably reduce their percentage share of the entire wallet. Right. And I think, so I remember saying that of course, we discussed around regulation and how in some European countries, Uber drivers who used to be freelance are now seen as employees of Uber, and how will that affect anything. Right now, in Nigeria, Africa, they're still freelance, right? But of course, Uber seems to have recognized that, yes, fuel prices have gone up significantly, right? So I think that it's only fair that transportation costs increases alongside, right? So there's been a 13% increase here in Nigeria. I think 20%, in Lagos.
Yeah.
And 10% price increase in Abuja, right? And a few other, increases across other African countries. I think is the first step to appease their drivers. Then now to figure out a way to ensure that their customers, that their own income is being pressured from every angle, trust me, from every angle, from rent to food to fuel to everywhere. Right, to be able to say, okay, can I still afford to pay for this service? How do I continue to pay for the service? So I think it's the problem of what we call a two-sided marketplace, where you have drivers on one side, and of course you have customers on the other side. Right, so we have to figure out how. Uber's management has to figure out how to ensure that we give incentive to people, to their customers, so that the number of trips or the activities on their platform does not drop because of the price increases.
Now, you mentioned fuel. If I stick to here, I've only got a couple of minutes to go. Here in Nigeria, government and Labour are still negotiating what to do about fuel prices. Does this end here, or can we see further? Because I imagine that if cost of living goes up, this will continue to be a recurring thing.
Yes.
What do you think?
So I think that this is just the first step. I think that fuel prices have not gotten to the level. I think fuel prices right now to date, the Nigerian government with subsidy payments is still unsustainable until the sector is fully deregulated, where government doesn't have a hand in the pricing of petroleum products, which is the key cost component for Uber drivers, and of course car maintenance and other kind of things, right? Once government totally removes subsidy from petroleum products, of course it means that the price of petrol will be determined by the price of crude oil, which is the major input. And of course, that price of crude oil goes up and down, and then that will determine what the final price of oil will be. So as of today, because government is paying subsidies, the actual price of petrol is still meant to go up. So once that happens, it means Uber will probably have to review their price one more time before the end of the year.
Fisayo Durojaye, EchoVC Partners investment analyst. Thank you so much for joining us.